It is September 18th, 2024. The US dollar is declining. The stock market is starting to roll over again. Interest rates just got cut by 50 basis points by the Federal Reserve. Every prediction that I've been making on this channel is coming true. So what the hell does all this mean to you? So let's talk about it. This is the Hey Ed YouTube channel. I am your host, moderator, and all-around nice guy, Edward Anderson. Okay, so listen, this is a pretty important video here today. There is a lot of very, dramatic news here I'm going to give you today. I got to tell you, in the end, I'm very excited about it, and I'm going to explain to you why, and I'm going to tell you why you should be too, if you're doing the right things. Okay, so let's start by taking a look at what's going on with the US dollar. Okay, the US dollar index, the Dixie, down 0.06% on the day. But let's look at a little bigger chart. Okay, this is what the dollar has been doing during the course of this year, since January of 2024. And you'll notice that since late June, it has been on a very steady decline. But let's take a little longer term look at the performance of the dollar. Now, I don't know whether you can see this because the more I expand it, the thinner the chart gets. And I'm not going to bother going in all the fancy technical analysis, but let me just tell you that right now we're approaching a very important support level down here at 99.57. And if you draw a line here and here, you can see a very important technical chart is forming, and it's pointing to more downward movement in the US dollar. So let's blow it back up a little bit here. Okay. Now, all the reasons for the US dollar to be declining the way it is have been discussed on this channel ad nauseum. So I'm not going to go over them all, in depth, right here. But primarily, it's US monetary policy, the idea of printing dollars out of thin air on a regular basis, and foreign countries who are starting to ditch the US dollar as a reserve currency. I mean, the US dollar is still the world's reserve currency, but it is steadily losing that status. And if and when the day comes that the US does actually lose its world reserve status, then you're going to see real mayhem. You have not seen anything yet. I mean, the march toward obscurity might be slow and gradual, but it is definite and it is inevitable. Okay, so listen, the decline of the US dollar is really good news if you own hard assets like real estate, a little bit, but really gold and silver. For you guys, it's really good news. The people for whom that news is not good are those people who buy groceries, those people who buy gasoline, those people who buy clothing, those people who like to travel, those people who are basically alive. For all of you guys, it's not good news. Hyperinflation is even more likely than it was yesterday, which I have been predicting on this channel now for a long while. I've given you a lot of warning, and I've given you an actual, prescription for things that you should be doing, to prepare for it. Okay, so let's move on to what happened today in the stock market. Okay, so today was a very big day. The Federal Reserve announced a cut in interest rates by 50 basis points. So let's start by taking a look at how the market reacted, and then I'm going to tell you why the market reacted the way it did. Okay, so here's the 1 month chart on the Dow Jones Industrial Averages, and you'll see that today the market was down 100 points by the end of the day. Let's go back 3 months to get a little bigger picture view of the market. Okay, so after that really nasty sell-off that we had, a month ago, and this sell-off really represented, the carry yen trade disaster that went on in Japan. That was the impetus. And then the market has been, see this big rally the market's been having here this past month? This is all a sugar high based on an expectation in interest rate cuts. But let's see what happened, intraday here during the course of today in the market. Oh my God, what a mess. Okay, see the spike up? That was the news. Okay, so this is a textbook, example of, buy the rumor, sell the news. Okay, the event has happened. The market is all about, what are you going to do for me now? Okay, it digests, good news very quickly, very efficiently. After that, it's saying, okay, so what's next? And the street is saying, all right, we've got about as good as we're going to get it. Just look at how chaotic it got in here. This is not a good sign. Okay, so what today's action is telling me is, okay, all the good news is built in. Now, this whole business about cutting interest rates by 50 basis points, that's pretty dramatic, okay? And it is such a sign of corruption. The reason why they did this is because there's an election coming up, and the powers to be want to stay in power. So they're trying to juice the market. So the market has not been, going up this past month for any organic reason. It's been going up because it's been manipulated by our government. The government is doing everything it can to con you. Now, a lot of people are saying, oh, geez, what great news. They cut interest rates by 0.5%. That's really good news because I'm planning on buying a house, or I'm planning to, refinance my house. So some people consider this really good news. Well, this is the way I look at it, and this is the way you really should be looking at it is, okay, this shows that the economy is in trouble, even though the politicians out there are telling you everything is fine. The jobless rate is at an all-time low. I mean, lies after lies after lies that I've been documenting here, on the channel. Well, they would not be cutting interest rates, especially this dramatically, if things were good economically. This is a bad sign. This tells you that as much as they've been lying about how everything is good, they know, because they know what the real story is. They know that it's bad news. They know that the economy is in real serious trouble, because that's when you lower rates. You lower rates in order to boost the economy in bad times. That's when you lower rates. You raise rates when inflation is out of control and you're trying to tamp it down. But the process of raising rates is painful for the public. But that's the idea of raising rates. The process of raising rates is to purposely inflict pain upon you, to make you feel poorer, to make it more difficult for you to live your lives in order to slow the economy down, to reduce inflation. That's the teeter-totter effect here, right? So this might be oversimplified, but it is accurate, okay? So remember, when you lower rates, it's a sign of a bad economy because they need to prop it up. When you raise interest rates, it's a sign, ironically, of a good economy because people are spending money, which leads to inflation, and so they have to tamp down economic activity. So that's why raising rates is done during good economic times. Ironically, let's remember that the Federal Reserve is not a government agency; it's a private bank that's owned by a few large banks. And how did the Federal Reserve make money, for their, elite friends? Is they print money out of thin air, and then they'll lend it out, at whatever interest rate they're getting, and they make free money. That's how the Federal Reserve makes money, and that's how banks make money. So the higher the interest rates are, the more money that these banks make. So they don't like to cut interest rates because it's costing them money. So what this is telling me is that, mortgage foreclosures, car repos, credit card delinquencies, those are all at significant levels now. They're accelerating. Well, I don't care how much money that a bank or a credit card company is making off of the loan they put out to the customer. If that customer goes bankrupt or if that customer forecloses, they're not making any money off that loan. So the idea of cutting rates, especially this dramatically, is a sign of desperation. So why am I excited about all this? Is because I am prepared for it. I prepared. Are you preparing? Please let me know. How are you feeling these days? Are things as rosy as the government says that they are, for you? But more importantly, have you done anything that I've been suggesting on the channel? Namely, get your money out of the bank, acquire some gold and silver, and establish streams of passive recurring income. That's the mantra on this channel. Everybody should be doing all three of those things. And there's no downside in doing those three things. I mean, if I end up being wrong about the economy and about the banks and about the US dollar, there's nothing wrong with having gold. There's no downside in doing the three things that I told you. A lot of people are really, really hurting out there. It is so important for you to establish streams of passive recurring income. And I've given you some really good programs to do that on this channel. And I've got another brilliant one that I'm going to be showing to my subscribers here in the next few days. That particular program is going what I call, the Hayed Passive Income Stream Hall of Fame. So please stay tuned for that announcement. Please like, subscribe, and share. Ed Anderson, live from Minnesota, signing out.
Copy that.